If you are a business owner, you have to have insurance for your life. I know that when you're in business, as a business owner myself, you have to have a bunch of other business insurances just to cover the business. But oftentimes we overlook the importance of having a good life insurance policy. All right, so what I want to do in this video is really just dive into why you need one and how it actually benefits you to have one, not only after you kick the bucket, but during the time that you have a business if you select the right plan. All right, so first, before we dive into it, for those of you who don't know what life insurance is, let's just take a quick moment and explain how they work, right? So life insurance has several different types of policies that you can have. The simplest way to kind of explain what life insurance is you pay a monthly payment, which is called a premium. It doesn't have to be monthly. You can pay yearly, you can pay semi-annually, you can pay every quarter. But typically speaking, the most cost-effective way to do it is to pay either monthly to control your cash flow or to pay yearly because it lowers the amount that you pay in fees. You pay this premium and it gives you the ability to get access to a death benefit. That death benefit is basically what you're paying for. So if Johnny pays a monthly premium of $30 a month, you might get $100,000 or $500,000 or $1 million worth of death benefits. So should Johnny die, his beneficiary, which is the next term, the person who Johnny buys the policy to give access to the $1 million for, the beneficiary would get that death benefit should Johnny pass. So the beneficiary is literally just who I want this money to go to afterwards. This person has to have an insurable interest should you pass. So for example, you wouldn't have an insurance policy where you pay, just some random person, right? You can't just pick a person out of the phone book. You want them to have some type of a interest in you somehow. So here's the best way I can give you an example. If you are married and you and your spouse have insurance policies and one of you pass, whoever passes would be passing on the insurance death benefit to their beneficiary, which is their previous spouse before they passed. Okay, so now that we've covered what insurance is, I want to quickly just kind of give you some understanding of why this is beneficial for business owners to have. So, as I said at the beginning, there are several different types of life insurance policies. There's term insurance, there's universal life insurance, there is whole life insurance. Each one of these policies can be used differently based on whatever your goals are, right? One of the things that I would say that people do that actually is not a good thing for them is they go on social media and they hear some person just talk about like, oh, this is the benefits of having this type of a policy or the benefits of that type of a policy. You should never look at anything else. And as somebody who has sold insurance on several different levels for almost a decade now, I can tell you that that's the wrong way to approach life insurance as a whole. And this is why, is because life insurance is a part of a strategy. It's not just, for example, one of the most popular people that you'll ever meet that talks about what you should do is Dave Ramsey, right? He says it's stupid to buy anything but term. Well, maybe, right? And it depends on what your overall strategy is. The problem is Dave doesn't tell you his strategy is why you should only look at term. If you're not somebody who likes his strategy or chooses to use his strategy, it doesn't make sense to buy term for some of those people. Sometimes it still makes sense to buy term, and it depends on an individual's situation. So let me just give you an understanding. So first, you have term. Term is basically, hey, I'm paying for a item. That item is a death benefit so that my beneficiary gets it. Term has a benefit that you have only a certain amount of time that you're going to pay for it, and you only get access to it for that certain amount of time. So if you buy a term policy, it could be a 1-year term. So every year, that amount that you pay for your premium will adjust based on how much older you are and based on your health factors. If you have that policy for a 10-year period where it only renews after every 10 years, then you'll pay the same amount for 10 years. And then at the renewal, it'll adjust. You can pick several different, term limits, meaning the amount of time that you have for that term. But ultimately, it's term. You're paying for life insurance for a period of time. If you die a day after that period of time, you get nothing. You just had the insurance for that time frame, which is good in certain situations. And you have to know those situations before you choose your insurance. So that's term. Universal life. Well, before I get to universal, let me explain whole life because that'll make it easier to understand universal life. A whole life policy is essentially two things. I'm getting a life insurance policy that is considered permanent. Permanent means that you have it from the day that you buy the policy all the way up to age 100. For some companies, it's age 120. But that life insurance policy, as long as you're paying for your premium, is there. And then you have, outside of that life insurance, you have, we'll just call it a saving mechanism. It's not quite a savings account, but we'll just call it a savings mechanism to kind of be safe. That savings mechanism is something that provides cash value to the policy, right? So it essentially is like collateral. Should you have a situation where you can't pay the premium for a month or two, which is not ideal, but if in the event that something happens and you need to use that cash value to pay the policy, it's there. This cash value is actually up to the amount of the death benefit for most companies. Some companies, the amount can go above that death benefit. So when you have a cash value policy, the benefit is that you can also use that cash value while you're alive. This is beneficial if you're a business owner because let's say you have a $100,000 policy that has about $60,000 in it, and you run into a situation where you're like, hey, you know what? I need to get some cash just to kind of make sure that we are invested in this thing. And I don't have time to get it from the bank right now, but I know I'll get this money back over a year, let's say. You invest that $20,000 from your cash value, and you still have your life insurance policy in force. So that's the great thing. Now, here's the caveat. If you do that, and let's say within that year before you pay it off, you pass, the death benefit will subtract the amount that's owed before paying out to your beneficiary. So if you have $100,000 and you have a $20,000 policy loan against your policy, or from your cash value, instead of your beneficiary getting that 100,000, now they get 80,000. It's fair, right? You took out 20,000. So that's essentially, in a nutshell, how whole life works. Now, universal life, and this is where most people get confused, because universal life is often sold as though it's just like whole life, and it's not. It has elements that are similar to whole life, but it is not just like a whole life policy, or else why would you buy a universal life policy if there's already whole life? So to dive into it, a universal life policy is basically a term policy with a cash value that essentially is there to offset the fact that, all right, let me start over with that. A universal life policy starts out as a renewable term policy. So every year, let's say, or every 5 years, or every 10 years, whichever one, the policy will renew. And when it renews, the policy of the term policy goes up, just like with a regular term policy. What makes it a universal life policy, and what the benefit of a universal life policy is that they understood that, hey, instead of having it where you get to age 50 or 60 and it jumps really high, now we have a cash value amount that allows us to offset the price of the increase. So let's say you get a universal policy when you're 20, and that amount is $50 inside the policy, but you're paying $100 a month. Well, now you're stacking up $50 a month extra over time. You own that policy for, let's say you go to age 60. The insurance now goes from being $50 a month to, let's say, $1,000 a month. But because you've been paying more than you needed to for so many years, you have this chunk of cash that offsets the amount. So now that you're paying $100 a month, the other $900 a month comes out of the cash value. Typically speaking, a universal policy also gives you a guaranteed time frame if you should stop paying your insurance payment, or if the insurance payment exceeds what you pay monthly. So, for example, in that situation, this person might have a 15-year guaranteed period. What that means is that they have enough in their cash value to pay their payment without them putting any money in for 15 years. Once that 15 years is up, it's gone. So if in this situation at age 60, you are not paying any money toward your policy, in 15 years at age 75, if you pass or if you don't pass, that policy will then lapse, meaning you at that point would not have insurance. So the goal with a universal policy is to make it, because it is seen as a permanent policy, is to make it to age 100. But it lowers the amount that you would have to pay monthly as a premium, because universal life is essentially, for all intents and purposes, universal life is cost less to own than a whole life policy at the moment that you purchase it, typically. And that is why people buy it. Oftentimes, like I said, people sell it as though it's the same as whole life, and it is not. So don't fall for that trap, because it's definitely a trap. Okay, so let me give you a way to understand, if you're a business owner, how you can use life insurance to protect your business. So let's say that you have a business and you have a partner. You and your partner, after you've built your business up for the first few years, you start being successful. Now you realize, like, hey, you know what? I own this portion of the business. They own that portion of the business. That value, if I were to pass, needs to go to my family, because obviously I want to make sure that they get what they need, and they don't want to have to run the business, right? So you would use what's known as a buy-sell agreement to buy the other party out, and then you would use life insurance as a way to pay for that buyout. So, for example, let's say that you two have $1 million policy. The business pays for the policy. One of you passes, and then the family doesn't want to run the business or take part in the business. The life insurance policy is used to buy out your partner, so that you own 100% of the business and the family gets paid for their ownership in the business. That is the best way to approach understanding one of the benefits of being a policy owner. Now, the good thing is that can be a term policy. And let's say that you're 30 years old. You could do a 40-year term policy if you can find a 40-year term policy. Some companies have it, a lot don't. But if you can find it, then you could use a term policy. And I will say, over time, it will get more expensive, so you have to consider that in your business. In my opinion, the best way to approach this is to get a term policy that is convertible, which means that you can change it from a term policy to either a whole life or a universal policy at some point in the future. And the reason why you would do that is because it saves you money at the beginning. And then over time, when your business is able to afford to put an extra certain amount in the premium, now you can convert it over. And you don't have to convert a whole, let's say, $1,000,000 at a time. If you can only afford to convert $100,000, then you do that. And then you do that every year, 2 years, 3 years, until you've converted the full amount so that you have that permanent policy in place. So, key benefits of being a business owner and using life insurance, right? So, one of the main important things is that it is going to give you a lot more financial security. Like I said before, if you were to run into a situation and you have a whole life policy with cash value set aside in it, you can access that cash value as a way to take care of some of the, let's say you have an emergency. You can just take care of it with that. And the good thing is that you don't necessarily have to pay back that policy loan immediately. You don't technically have to pay it off if you have your policy structured the right way with the right company, which I'll get into in another video because that's a lot. But if you have the policy structured the right way and you take the cash value out as a loan, you don't technically have to pay that off because there's also that element of collateral in the policy to say, hey, well, I took 20,000, I have 80,000 in there, and the collateral is the 80,000. It also helps obviously protect your family, protect your loved ones, protect your business partners, right? It gives you a little bit more protection in terms of, as opposed to getting a loan from a bank, let's say, because, for example, if you get a loan from a bank for your business, you pay 9-10%. With a loan from your policy, you pay 6%, let's say, right? Good thing is you'll know what that percentage is before you ever get the loan because it tells you in your policy documents what the amount you would pay is. On top of that, if you're with a company where you can participate in dividends, on some level, that dividend can help you to offset the cost of that policy. So there is some benefit to having that as well. So ultimately, here's the best thing I can explain to you when it comes to having a life insurance policy as a business owner, whether you have partners or not. You immediately, in my opinion, once you become profitable, should consider buying a life insurance policy. Partially because age is always going to be a factor. Health is always going to be a factor in your life insurance. In your life insurance premium and how much you can acquire for your life insurance. As you get older and as you make more money, you want to consider, hey, how do I want to make some changes to this policy? Do I want to convert a portion of this? Do I want to convert all of it? Do I want to buy more insurance? That's something that if I'm honest with you, you shouldn't be making that decision by yourself. You should always be talking to someone who has expertise. So if you want some information, you want some help, I do a free consultation. You can just click on the link below in the description, sign up for a consultation. We'll kind of go over everything. I'll give you some answers to whatever questions you have. But that way we can do what's called a needs analysis or a needs assessment. If you can assess your needs, it'll give you a plan and tell you, hey, based on my individual situation, this is what's best. And sometimes that means you get some products. Sometimes you already have some products in place that you don't have to worry about that. And realistically speaking, overall, the goal is just to make sure that you have peace of mind to know exactly what you need and where you're good, where you have weaknesses, and where your strengths are. Hopefully you've gained some type of a value out of this video. If so, make sure you leave me a comment if you have any questions, or even if you disagree, just let me know in the comments below, because there are always ways that I can help out. Thanks for watching. Be sure to subscribe, and I'll see y'all in the next video.